Hello, it's Darren from Investor Income. Welcome to the channel. It's been a fantastic week. I've actually decided to take tomorrow off because the week's gone that well, and also I have a lot going on. And so it's time to sort some things out tomorrow. And we are looking today at the trades we've taken on Euro, Japanese yen. Just the last couple of days. The entry I'm just in at the minute, and this was the entry earlier on today. So this one was beautiful. We've got a bit of divergence here. We trade these lines, the gap between these lines. It wasn't perfect setup here, but we've got the indicators down the bottom here to assist us as well. These started to pinch together, so I took a trade there earlier this morning, and that one carried on down, and I came out just there on our line as usual. Sometimes we'll just scalp them, but lines are crossed over. It's still very overbought, so I traded it down to the baseline like we normally do. It rolled over then during the day. I didn't enter a position here earlier in the day. I wanted to see if it made a move lower, and it did. So that was nice, and we got more deviation. So I entered a position there. And then the trade before that, a day before, this was beautiful. We had a lovely spike up. It's pretty much parabolic rise up, and then a bit of consolidation. I got in probably a touch early on that one. It didn't start to pinch at that stage, so it was an early entry, but I had loads of deviation, so I was quite happy with that entry. And I traded that one back down to the baseline as well, so that was very nice in addition. So the system trades the same way. This is a long average, and we just trade back to the baseline if we want to, or we can trade the other way. Now, I have also just started to take a few trades with the trend, scalping those, and that has been working out quite nicely. You can see the kind of entries you could get with the oscillators. When the green's below the red, it gives you a rough direction of where the trade might be heading. And when we're like this, we're in a neutral area, we just got a bit of consolidation in the middle here. I just took the spike, for example, and that's just a quick trade. You know, you're not getting a massive amount of pips, but it's a nice extra trade to get. So that's why I've been trading recently, adding a few extra pips onto my day, and it's worked out very nicely. I could have in fact taken a few of these down here, but this one, because these have crossed over, that would not be ideal. That's not a sort of signal. Even this one here with the two converging, you'd only want to stay in that for a short period of time. A bit risky if you were to take those ones. You really want kind of a clearer move. But it's given us extra trades that we haven't had before. So when you see here, we get a crossover. It goes down, it goes flat completely, and then it's basically in a range and starting to move back up. We've got the longer trend showing it's going bullish, but it's likely to go back up to the highs when you see this converging like this. So it's making another move up, but the oscillators help us in that decision making. So if we are by any chance it's still in any trades at this stage, we've got a good warning there that things are about to get a bit higher. So when they start converging again, that's when we can take a nice entry. When the move's starting to end, or at least show signs of ending, we do get these parabolic moves. You know, we just go straight up. They just go too far, too overextended, and we just trade that movement. And we had a difficulty on the pound, so let's have a look on the pound. I show where it didn't work so well. So you can see we've got a strong trend here. Everything's pointing up, so that's the first point we have to be careful of. So you can see we've got a trend here. The point of this move here, these were fairly flat, which is why I entered position here. And this one I just scalped. Basically, I scalped that one because I was just trading on the shorter term oscillator. These were expanding at the time, so just took a quick trade down to the bottom of that oscillator and came out just around there. So that was a scalp on that one. I was quite happy just to take some money out of that. It was looking quite bullish. And then made a move up, and this stage it started to pinch, so I took a trade. I didn't scalp that one. I stayed in that one and stayed in that one and stayed in that one. It crossed at the top here, gave us an absolute perfect entry if we just traded on the cross. It then just went completely dead. The market went flat, and that is a bad signal. I never like that. So I was left in it, and I just ended up coming out for a short loss on that one. It was around here. I was going to bed anyway, so I just closed that one out. I took a little loss on that one. That was break even, slight profit here, but overall I was in a very small negative on that trade. But I'm quite happy with that. I've cut that trade. It didn't perform the way I wanted to. Market's gone dead. I'm not going to hold that overnight. I'm not interested. It might spike down here, but for what I'm going to gain, it's not worth the risk. I've already taken some money on this earlier trade, so I was actually on this move. I'd actually made a profit, but on this last trade, I made a small loss. So that's the way it goes. You won't win every single trade. We don't trade like that anyway. So here we go again. We got some nice deviation. These are starting to move further apart. And we've got a spike up here. So just traded literally on that spike. Waited for it to go nicely up. Got a good entry on that one. And then it kind of went flat. Went way overbought territory. So I was quite confident we're going to get some move down at some stage. And it moved down and actually took it around in the middle here. So it was a bit risky because it made a move back up. Quite a stiff move back up, so, and then came back down. I wasn't, to be honest with you, actually paying attention at this stage. So anyway, it all worked out well, and I took profit, and nice bit of profit on that trade. So that was all very nice, and that's pound dollar. But you've got to see where sometimes it won't work absolutely perfectly, and you just get that consolidation area, and we just close those trades out. You're taking a tiny loss of actually taking a profit overall. So why would you want to run the risk, for a few extra pips? And just wait until you get a better position. You got plenty of time. You don't have to rush getting into them. And we just want these moves to peter out a bit, and then we're going to get in at better levels. So we only ever look at trying to get in a better position. You can see exactly the same's happened again. It starts to consolidate together, and you enter, and then you get a lovely move back down, and you just take it out at the bottoms there. You can even trade just on this green line, enter positions, then come out when it bottoms out down here when it crosses again. So that's that would have been an absolutely fantastic move. But I take money when it's on the table. I don't want to be holding too many positions for too long. So that's the way I trade, and try and keep the odds in my favour all the time. So you see the pound dollar had the same move down the bottom here, and when it's quite flat like this, the oscillators move down, and we've got a bit of a pinch going on here. So you'd be quite able to take a trade here. Now this isn't my preferred position because we don't have any deviation away from these averages. Deviation, I mean the distance between the averages and the price where it is at the minute. However, if you just traded on the oscillator, and you traded, where it's pinching to where it starts to pinch again, it wouldn't be a bad trade. So I'm just trying to work around that myself as well, because my way of trading is with that deviation away from these price lines and trading the movement back. However, since we've introduced this very recently, it's opening up a lot more opportunities, and it's just me having the confidence in that to take those trades as well, because they won't always work out, although you see here yet again it works out going down to the bottom here. So it's very solid, but until I get to see it in the live market for a good period of time, I'll be sticking to my strategy that works and the way I trade for a living. So I'm not really, I'll take those extra scalp moves, and I'll take a little bit of risk, but I'm not going to move away from my core position, even though we do look like we're getting significant amount of upside on those moves. Now you look at the situation here, and this is one of the reasons, is you get a pinch there. It's no deviation whatsoever, and price just continues to be above. It doesn't actually go below at all, and it just stays above. Now you could, if you did enter position there, you can simply re-enter positions, which I do in any case, and re-enter again, and then it makes a move down to the average. You can come out, that'll be a slight loss, and you'd have two significant wins on that one, and it does the same again. We've got a lovely move here, and then the absolute perfect entry there, and you trade that down again. So it's just the same thing over and over again. If you keep with that deviation, you keep the odds better in your favor of that move happening, of having some kind of move. But it's not to say this doesn't work, and you see a time where it has worked and a time where it hasn't worked. So you could enter there, even come out for a small loss on these moves if you didn't like the way it was happening. But that's just the way it goes. You're not going to get absolute perfect entries. So I hope you enjoy this content and understand the way we trade. If you do want to join the group, email me below and I'll get back to you as soon as possible. And please like and subscribe to the channel, trying to grow it. And thank you for your time, and I'll talk to you very soon.